Hi guys, today's session is budgeting. You know that what is budget? Budget is basically known as a quantitative statement that has been prepared prior to a certain period of time for the purpose of attaining a given objective that is known as budget. Budget prepared for meeting a certain kind of financial objective. Budgets are used for several purposes. One is to plan the activities. So each and every functional manager can plan their activities meticulously with the help of budget. How many units to be manufactured? That is in the budget. How many units a firm can sell it in the market? It's in the budget. How much profit the company can expect in the next year? That's also in the budget. So each and every functional manager can plan the activities with the help of budget. Then the second important objective of budget is it helps to communicate between the functional managers. It helps to coordinate between the departments within the organization. So how it is possible? Say for example, the marketing manager can communicate with the production manager. Production manager can also communicate with the marketing manager with the help of budget. So I'll produce this much and you sell this much. That kind of communication will take place through the budget. Then the next important objective of the budget is it helps to allocate the resources very efficiently and effectively. Suppose if the firm want to manufacture 25,000 units of product, how many units of each and every raw material is needed, and we can allocate that resources very effectively with the help of budget. And how much labor is actually needed to manufacture that product, that's also can be allocated. So all the inputs can be allocated very effectively with the help of budget. And it also helps to control the profit. How much profit has to be needed. And for that, you can plan all the activities. And finally, you can evaluate the performance also with the help of budget. What are the types of budget? Let's look into that. The first budget is known as production budget. And second one is known as sales budget. And third one is materials budget. And all the functional budgets will be consolidated together, which is known as master budget. Master budget is a budget which consolidating all functional budgets. So the budget's preparation basically starts from work. It always starts from the sales manager's desk. First the company will prepare the sales budget. How many units of each and every product will sell it in the market? Maybe 4 markets will be there. In each market, how many units will sell and what will be the selling price? So we will prepare a budget which is known as sales budget. And based on the sales budget, then the production manager will consider a lot of things like estimated closing stock and estimated opening stock. Then he prepare a budget. That budget is known as production budget. So this production budget is purely based on the closing stock and opening stock of the products, and based on that this budget is prepared. And from this production budget, some other budgets prepared by the managers, that's known as direct materials budget, direct labor budget, and other overhead budget. And for selling the products, definitely the marketing manager will give some inputs and he will prepare one more budget that is known as selling and administrative budget. So that's also very important. So all these budgets, there are certain cash occurred, which means that cash inflows and cash outflows that occurred related to each and every budget. So finance manager will sit together and he will identify what are the cash inflows and cash outflows related to each and every functional activity that has been taken place in the organization. Then he will prepare a budget. That budget is known as cash budget. This is a budget which estimates the cash inflows and cash outflows very accurately based on the functional level of activities taken place in each and every department of the organization. And from this cash budget and from all these functional budgets, then there are 3 budgets which are prepared by the finance manager. That is known as budgeted income statement, budgeted balance sheet, and budgeted cash flow statements. The consolidated form of all these budgets are actually known as master budget. So it is master budget is nothing but it is estimated P&L account, estimated balance sheet, and estimated cash flow statement is known as master budget. This is the way the budgets can be prepared in the organization. Let's look into very fastly the budgets. The sales budget. This is one of the best example for sales budget. And sales budget has been prepared on the monthly basis: April, May, June, July, and August. And what is the selling price of the budget? That's also given here. So the sales manager will prepare the sales budget for the 4 months or 5 months, depends upon the situations in the company. So budgeted sales, what would be the sales for each and every month? He will estimate that, considering the seasonal fluctuations, considering the conditions, market conditions. And the sales manager will prepare a budget like this. 3 months, and then the quarterly budget can be prepared, half yearly budgets can be prepared. And there will be a selling price for that. Is there any revision of selling price is needed? They can identify that also. And this is number of units into selling price, and you will get the total revenue from the sales budget. This is the foremost sales budget. Then this budget will go to the production manager's desk, and production manager will consider two more things related to sales. One is known as estimated opening stock, and second one is estimated closing stock of finished products. So the production manager uses a particular formula to estimate the production based on the estimated sales. What is that formula? Let's look into that. Estimated production equals estimated sales plus estimated closing stock minus estimated opening stock. This is the formula to get the estimated production. So the production manager can prepare the production budget based on this formula, and he will give this budget to the sales manager for preparing the selling and administrative expense budget. So he will consider both the production related expenses as well as sales related expenses. All these expenses will taken together, and the sales manager can prepare one more budget, which is known as selling and administrative expense budget. A lot of admin expense will indicate for selling the products, and a lot of selling expense will indicate for selling the products, and a lot of admin expense will be incurred for running the business. So all these will take together, and there will be an estimation on that, and they will prepare a budget which is known as selling and admin expense budget. And the next one is cash receipts budget. What is that? Cash receipts budget and cash expenditure budget both can be considered. And how the company is selling the product to the customers. Is it on cash basis or credit basis? If you are selling the product on cash basis, how much percentage of the money will be collected in the next month? How much percentage of money will be collected after 2 months? How much amount will be, due in the nature? Everything will be found out from the cash budget. So cash budget is estimation of cash inflows and cash outflows of the company. Let's look into that. This is the format for cash budget. There are 4 months: April month, May month, June month, and 3 months, and there will be quarterly results. And first month, what will be the total cash balance that will be considered. Then each and every month, how much cash which you can receive on each and every month. And finally, you will calculate the closing cash balance. Then this closing cash balance will transfer to the opening cash balance. And likewise, you prepare a budget that is known as cash budget. Then the next one is budgeted income statement. This is a statement which shows what will be the income for the next year. And revenue will be calculated from the sales budget. Cost of goods sold, you are preparing a budget related to all expenses. It will give you cost of goods sold, and all other expense details will be given. And finally, you are estimating the income for the next quarter or next year, that is net income you will get from the budgeted income statement. And the next budget is known as budgeted statement of cash flows. So you should know that cash flows are coming from 3 types of activities. The first one is known as operating activity, and second one is investment activity, and third one is financing activity. From these 3 activities, cash flows are actually occurring. Cash inflows and cash outflows are occurring related to these 3 activities. What are operating activities? Operating activities means the day-to-day activities of the business. Selling the product, making the payment of wages. Some kind of manufacturing expenses are occurring, and for that you are making the payment. If there are some selling and admin expense occurring, you are making the payment of that. These are the types of operating expenses that occurred in the business. And some cash inflows and cash outflows related to these activities are estimating in this particular budget. That is operating cash flows, budget activities. And next one is known as the investment activities. What does it mean? Investment activity means you are investing in machinery. You are investing in some fixed assets. and how much amount of money that you're investing in fixed assets. And if you're selling the fixed assets, that's creating cash inflow. So all these things will be considered under this head, investment activities. And the last one is financing activity. What's the meaning of that? You borrow the money, you repay the interest, you repay the principal amount. All these things are coming under the financing activities. So that is known as budgeted statement of cash flows. You prepare a budgeted statement of cash flows related to three activities: investment activity, financing activity, and operating activity. And finally, you can prepare a budgeted balance sheet. What will be the balance sheet for the next year? How much fixed assets, how much current assets, how much liabilities, everything will be budgeted, and you prepare an estimated balance sheet also. So these are the types of budget. So what is the last budget? Master budget. Master budget contains three things. One is known as estimated profit and loss account, estimated balance sheet, and estimated cash flow statement. These three things together is known as master budget. So the budget committee has to prepare this particular budget finally, that is known as master budget, by way of consolidating all the functional budgets together. So this is the way which you can prepare the budget. So there are different budgets, and all these budgets must be prepared in the organization for achieving the target. So finally, what is budget? Budget is known as a quantitative statement prepared prior to a particular period of time for attaining a particular objective, which can be profit, or which can be meeting the sales, or which can be reducing the expense, whatever it is. To achieve that objective, we are preparing the budget. Thank you.